Michael, that says Warner Brothers Discovery, contender or pretender? You're giving yourself kind of a wide range of outcomes here. You know, what do you think is most likely? Yeah. And what does David Zaslav need to do, in your opinion, to make sure it is a contender?
Well, I think the opportunity here is outside the U.S. As you know, the U.S. is really competitive for streaming. Discovery has a very strong position outside the U.S., and HBO has been very slow to move there. So in order to get to that higher level of contender, we want to see what they're going to do to build the international HBO Max product. And we're still waiting for details on that.
Zaslav would say, as you well know many times, that they have a strong international franchise via the old Discovery, the sports rights they have in Europe, and on from there. Does that actually help them in terms of the penetration you're talking about internationally?
I think it does. And the question is going to be, how quickly are they willing to move those rights to the streaming service, right? That's one. The second thing is they have advertising salespeople in all markets of the world. HBO Max needs to build an advertising-based product with an ad tier internationally. We want to hear about that as well. So he has assets abroad that he can leverage. The question is, how aggressive will he be? What's the pricing look like? And your point on rights moving over. So there's lots of moving pieces here. We start taking our time. We know there's AT&T shareholders who will sell the stock. They're not doing it today, but we think at some point there'll be an unwind from the AT&T side that'll put the stock lower, maybe give us a chance to actually buy this thing with more upside to our price target.
Yeah, I've been talking a lot about that, the so-called flowback issue, and clearly you don't think that's being reflected yet today. And the question is how much stock will come to market over time from those who don't want to own it. But what about the stock itself? I mean, some would say, and some of your colleagues actually out there upgraded it today because they say, listen, it's pretty cheap, trading at a lower multiple than certainly Disney and or Netflix, and with as much perhaps room ahead of it as either of those when it comes to direct-to-consumer.
Yeah, Dave, for us, the issue is when you look at the asset mix and the cash flow of this company, it's coming from cable networks, domestic cable networks, right? And you know this as well as anyone, those networks are facing cord-cutting pressures, ratings challenges. We're bullish on networks that have live content, live news, live sports. There's a bit of that at the Turner side, but not enough. And Discovery's networks are really, moving in terms of the content they have. That content's really better watched on demand. So to us, yeah, it's cheap on cash flow, but the core of the cash flow are from businesses that are going to decline, right? And that's been the problem, whereas Disney and Netflix don't have those types of exposures in terms of the same size.
Right, nor do they have quite that leverage ratio. I'll play Zaslav now, though, and I'll be like, Michael, come on, 35% of the viewership in the U.S. watches my networks every night. And my CPM is 25, where the networks get a CPM that's far higher. I still have lots of room to go on the ad side.
Yes, Mr. Zaslav. But if you look at the decline in reach of the networks, you're seeing broadcast networks hold on to their audiences better because of the NFL and live sports, whereas cable networks are really under pressure. So yeah, they're getting 35% of the viewing, but that viewing is going to be declining. Well, the absolute numbers will be declining, and broadcast CPMs have. You know the argument, they're higher because they have better reach, right? So to us, I think you touched on it. It was the leverage. Putting that much debt on it just gives us, pause for concern, right? Like it's a levered play in cable networks. We think, we have time to actually make that bet at a lower valuation.
Shepard Smith here. Thanks for watching CNBC on YouTube.